thank you everyone for joining us today. As you know, we are here to talk about tariffs. Not exactly the same as the Wall Street Journal or New York Times news ticker on how everything's changing from moment to moment and what might happen next, but really Similarweb specialty is going to be able to look at what real consumer behaviors we're seeing digitally change in response to the changing and fluctuating situation. Just a plug up front, we do have a Q&A on the chat that we'll be monitoring ongoing. We'll try to answer you live in there directly. And if you're not in as anonymous, if we need to take a question offline or can follow up with you afterwards, we will certainly do that. Speaking of following up afterwards, you'll hear across our speakers today, we're going to have a number of efforts across Similarweb to track the ongoing situation. So please keep an eye out for all of the follow-ups or feel free to reach out to us as we go through. Okay. First and foremost, who you'll be hearing from today. So I'll start by introducing myself, Mackenzie Cahill. I'm our AVP of Advisory Services, overseeing the Americas at Similarweb. What my team does, and especially the three folks you'll hear from more than myself even today, is we bring Similarweb data to our biggest and most strategic clients every day to help them make informed business decisions. Within that, we have industry expertise that in the form of the folks you'll be hearing from today. So starting with Ben Parks, he'll be speaking to the consumer goods and retail industries. Heidi has overseen our travel vertical for a number of years, and Gavin, who works on investors, will be talking about some of our data around consumer sentiment as we go through. Before we jump in, I like, especially in these bigger forums, to give you a high-level view of who Similarweb is. I think a lot of folks on this call we haven't worked very closely with before. And essentially, if I boil it down into one phrase, they're saying it's that Similarweb has a finger on the pulse of the digital world. And so that's important for me to set up front, because I want you to think about and orient yourself in the myriad of use cases we can speak to and do speak to every single day. So a lot of it's our platform and tools where we talk about competitor analysis, market research, audience analysis, website analysis, performance marketing. The list really can go on. Our data spans over 190 countries, over 100 million websites, 8 million apps, 6 billion keywords, 5 million retailers, and 250 million SKUs. So we really capture an incredible amount of breadth and depth when we talk about digital data. The other part that's really important to know is that we monitor and measure things often in a near real-time basis. So we're able to react and help our clients react in a very quick turn. In terms of that data, I'll give you a very high level. I don't expect this to be a technical call, but our data methodology is very robust, diversified. So I can give a little bit of sense to that to make you guys better understand really what you're looking at. So in terms of our data sources, we're collecting billions and billions of signals from four kind of core buckets, we'll call them, right? So first and foremost is our contributor network, or our panel. That's anonymized behavioral data from opt-in participants across desktop and mobile devices. We have first-party measurement data where millions of websites and apps are sharing their first-party analytics with us for benchmarking. Public data, so capturing and indexing public data from the open web on millions of websites and apps. Partnerships, so across ISPs, other trustworthy sources to help collect even more of these digital signals. That all gets pulled together, and we use machine learning and AI models to spit out everything you're going to see today. And you can see on the bottom here just all the numerous ways we deliver depending on the use case and needs. So when you think about sitting on that type of data asset, it really has come to our attention over the years that Similarweb is really helpful in times of volatility and uncertainty, of which we are certainly in, which brings us to why we're here today and how we can show you what to measure ongoing. So from an agenda perspective, we'll start with consumer sentiment that Gavin will be speaking to. We'll get into some answers in consumer goods from Ben, and then Heidi will cover us off on travel. I encourage everyone to listen across, because there are common themes that even if you're not sitting directly in one of these verticals, probably will be able to have some learnings and speak to on a more general basis. So without further ado, Gavin, take it away.
Amazing. Thanks, Mackenzie. Hi, everyone. So I'm going to be talking about two key themes here. The first theme is going to be US employment. The reason for this, I think it's really important. It affects a lot of different things. And if you think about it from like a central bank perspective, there's this dynamic going on that you see a lot of media stories kind of entertaining where there is a potential chance that we see US unemployment increase. And that's an issue because typically when you have an increase in unemployment, you want to ultimately speed up the economy. But with the kind of the tariff situation looming and prices increasing, kind of alluding to inflation, that's also a situation where you want to be kind of slowing down the economy. So there's a bit of tug of war going on there. Also, when you have US unemployment, there's kind of aspects that you can take into consideration, such as reduced consumer spend or spending power, shall I say. So I'm going to touch upon that as my first main point. And lastly, I'm going to do something slightly different where I'm going to be talking about user sentiments towards tariffs. So I'm kind of thinking about how people are educating themselves. Like, are they actually being proactive in terms of learning about tariffs? Are they changing their behavior based on what they're reading in the news about tariffs? And is that kind of like translating into more of the industries that Ben and Heidi will be touching upon later on in the session? If you jump to the next slide. Okay, so first and foremost, we're going to be seeing like, have we seen any behavioral shifts within the US job market and specifically unemployment? If you jump to the next slide, there's two ways I'm going to be tackling this. The first way is I'm going to be looking at people who are likely unemployed and are going to these US or .gov websites looking for like signing up for unemployment aid. The interesting thing here that we've done is we've kind of looked at it from like an aggregated point of view across the whole of the US versus like for the first 3.5 months and also the rolling 4 weeks versus the prior year. And like ultimately what we're seeing is that trends are relatively flat. Like they're within 1% of each other from both the 4 week perspective and the year to date perspective. Things slightly change when you look at that from like a state level, going one step below, where you're seeing roughly half the states are speeding up in terms of unemployment or unemployment aid. And there's also about 50% of the states that are actually trending down. And this is kind of a weird dynamic of expandation and retraction because the states of the 25 states that are increasing, they're about 50% of the population. And that's why we're kind of netting out as a 0-0. And interestingly, there's some states that are showing hypergrowth, such as Wisconsin, Kentucky, Wyoming. But these are relatively small states in terms of population. So they're kind of they're kind of prone to having some volatility in the data. They also kind of equate to about 4.5% of the population. Something interesting though is we do see states such as Ohio, which is about 11 million people, and they're seeing almost 100% growth year over year. And states such as Florida, which is about 23 million, we're seeing all in all about 20% increase over year. So like just to summarize this one slide, we're seeing a relatively flat trend as my first point in terms of US unemployment. If we jump to the next slide, what we're seeing here is like a slightly different angle. So you've got people who may be unemployed looking for aid. Now we're going to look at it in terms of the demand for people actually searching for jobs. And even though there's a bit of a mixed bag in the previous slide, this shows a far more clear picture in terms of trend. Like there's a lot of seasonality in US in terms of like people searching for jobs. Typically in the fourth quarter, you see a massive drop off with like the seasonal trends, and there's a massive spike in 1Q. Ultimately, when you look at the year to date of this year versus the last year, we're actually down 16% year over year. So just to elaborate on that, we have a flat trend of people looking for unemployment aid, and there's a downtrend of people looking for jobs. So this doesn't typically align with the media stories that are typically saying that there's like a rise in unemployment or like an angst in that happening. And so far, shall we say. Like naturally, the way we did this is that we indexed the top 13 websites for kind of job searching in the US. And like naturally, there are going to be some massive downward trends that are making a little bit of bias, such as USA jobs for like federal jobs, which is down massively year over year. If you jump to the next slide. So like as I'm saying right now, we're not seeing any like compelling trends to say that US employment is on the rise or that it's actually on the decline. But what we're going to do is we're going to track that on a weekly cadence using these like heat maps, or we call them like unemployment and job search trackers. This is what Mackenzie alluded to at the start of the call. And what we would do is if you reach out to a point of contact at Similarweb, we'll be updating these weekly where you can kind of benefit off the mapping we've done for the US unemployment aid sites at the state level and kind of see if that's tracking over real time to see if those trends actually do emerge in one way or the other. Okay, if you jump to the next slide. Okay, so this is slightly different. This is a little bit of a spin that I've done. So we're looking at, are people actively seeking information in terms of tariff impacts? And next slide. So what we've done here is there's two ways that people look for information. Naturally, there's the standardized or the way that people have done it in for a long period of time, which is looking at news and media, ingesting like headlines and media stories surrounding tariffs that have been developing over time. But another way that people are now, like in the last couple of years, leaning to ingest information is they're leaning on LLMs. If you could jump back a couple slides, sorry. There you go, perfect. So the people are actually leaning on LLMs to actually have their like more complex topics broken down into layman's terms. And what we've done here is we've looked at all people within our panel who are actually going on to ChatGPT and asking certain prompts. These prompts are typically ones that contain the word tariff and the word Trump. So we're kind of alluding to like a small sub cohort of prompts that we're seeing. And what we saw that if I was to kind of take this graph here and we're kind of to lean it out to the left, you see that there was very little traction of people searching for this topic. Then in April 2nd, when the reciprocal tariffs were actually announced, we saw a massive spike by about 5x in terms of volume and people interested in this dynamic. It dropped off again, but naturally we saw there's a like a 10% drop in the S&P 500. You had Dow Jones Index down, where there's a lot of negative, like an influx of negative news, where people were kind of wanting to capitalize on that. But as soon as you saw that Trump announced a 90-day kind of pause on majority of the tariffs, we saw a massive drop off as quickly as it came in terms of people kind of being reactive as opposed to proactive in their learning. They thought, oh, market's up. In my opinion, they're not really caring so much anymore about it. We also did like a thing where we're looking at the most common words in these questions that people are asking, where people are asking about Canada because that was kind of the starting point that we were talking about, where people were saying, hey, like they're taking US goods off the market. They're like there's the talk about like power to the grid, but that typically dropped off in the second week that we were looking at. We looked at 3 weeks in totality, and things that we started to see kind of come through the woodwork were talks of China, and also in the last week we saw 90, which is probably people inferring that they're talking about the fact that the 90-day pause doesn't include China tariffs. And there's a lot of situations in the US, such as Amazon, where 50% of all products on Amazon are sold are from China. So maybe there's people asking more questions around about China and also about 90 days. And just to solidify that on the next slide. Oops, next slide again. Sorry, I meant to go back one. This slide here. So next slide, what we're talking about is we're looking at the sentiment of people in terms of their responses. So we can see that people were asking, naturally, they're asking neutral questions in majority. You're kind of asking for information from an LLM, but over the course of the 3 weeks we're looking at, where there's a massive influx of about 300% of people asking, in volume of people asking questions, and those questions alluded to China 90 days, we saw a big shift in sentiment. We used an LLM to kind of justify what these prompts in terms of which bucket they were sitting in. We saw there's a massive increase in sentiment where people were being more negative towards or negative questioning when they were asking ChatGPT around Trump's tariffs, and naturally they were alluding to China and to the 90-day pause as well. And if you go back one slide to the keyword aspect, sorry, the juxtaposition of the slides, this is kind of like a benchmark that I got from the Google search angle to see where people that are searching for like Trump and tariff keyword group sets. And like my final take from what I've seen doing a bunch of analysis on this in the last week is that like people are more in like a observatory stance. They're going into the data. They're looking at different headlines. We saw that the fact sheet for Trump's tariffs came out on February the 1st. Very little traction that this was getting, even though it's the main landing page. However, when there was like negative sentiment and a massive influx after February 2nd, people jump on it to kind of learn more about it. I'm not too sure that they're acting on it just yet. That's why I think like Ben and definitely Heidi will allude to this in more detail in the coming slides. But just a little bit of like a top line macro trend to see what we're seeing, and just to kind of round up my thing on the next couple slides. If you go two ahead, yep. Next thing, I'll just kind of round up what I'm looking at. We have the macro trend trackers, which will kind of give us more understanding of how this is going to develop over the next coming weeks and months. And lastly, if you're interested in this from like a more equities perspective, I know I work in the investors team, and my team are actually doing a webinar tomorrow for the pre-earnings insights, where they'll be talking about specific equities and how these are being impacted by tariffs, such as Carvana and the automotives. And that's everything from me. If you go to the next slide, I'm going to say thank you to everyone. I'm going to pass over to Ben to talk to you about consumer goods.
Perfect. Thank you, Gavin, and welcome everyone. We're now going to go through consumer goods. I'm Ben Parks. I lead our consumer goods and retail advisory services team here for North America. So we're really going to look at some of the trends that Gavin talked to around, are these transferring into consumer actual purchase behavior? So the notion of wallets versus clicks for the consumer. Then we're going to migrate through to talk about how the retailers are prepared for a volatile market. And then finally, the de minimis dilemma. Temu and Amazon a lot in the market about the impact potentially for the likes of Temu, and we're going to jump into some of the traffic trends we're seeing for Temu in the market. So we've seen a lot of media fanfare over the last couple of weeks about essentially the impact for many leading brands. But are we starting to see a translation into consumer behavior? So the Vino effect, the first one we saw from search behavior was way back in March. It feels forever ago, but in March we started to see the emergence of Trump talking about potential tariffs on French wine. And what can we see in the Similarweb data? Well, we naturally saw a 6x rise in people searching for French wine. People trying to educate themselves about which of their favorite wines are coming from France. So whilst we've seen a 6x rise in people searching for French wine, we've actually seen it start to drop off as other tariffs have ramped in the media coverage. And lo and behold, in terms of actual consumer behavior from purchases, when we look at the wine category online for March year on year, we actually saw a slight dip in conversion. So what we're seeing right now is people are researching, they're going to places like YouTube to understand about their favorite wines, where are they from, but we're not seeing a direct correlation right now in terms of purchase behavior for the wine category. Another brand who has been rife in the media the last few weeks has been Apple. Now, you can't have missed a headline this week or the week before around the impacts of tariffs on the consumer electronics giant. And if we start to the left-hand side, Liberation Day, April 2nd, we already saw the emergence of headlines around the impact of Trump's tariffs on Apple's global supply chain. And we've been tracking the searches for iPhones, one of the products that's kind of got the most media attention. And on that first day, we saw a relatively small increase in people searching for iPhones. So we saw around a 7% lift. And from that, we saw around a 12% lift in people clicking through to apple.com. Then the story progressed to talk about the potential new price of an iPhone, a speculation around a $2,300 iPhone. And once again, we saw searching start to grow a little bit, but only by 9%. So if you imagine how much media coverage we saw, the actual search translation wasn't huge. And then finally, April 6th to 10th, we saw the real big headlines around the alleged jets flying in phones from India and China. And we did start to see a considerable increase there in people searching for iPhones. But very much like wine, we saw a lot of people in a research discovery mode. We saw 88% click increase going to YouTube and comparing the iPhone 16 versus prior models. So the question is, did this have any impact on Apple's total traffic? Well, next slide, please, Mackenzie. If we look at the traffic here for year to date for apple.com, we see a 29% increase in traffic for the launch of the iPhone 16e back in February. But as we progress to the right-hand side, we don't see a considerable increase in traffic of people going to apple.com during this time period. So it reinforces a statement that from an online perspective, not in store, but from online, we're seeing people in a discovery mode and not necessarily driving purchases straight away off the back of the tariffs. We did see one brand that actually changed their strategy based off tariffs. So there was one search word on April 2nd that actually saw a larger increase than tariffs, and it was actually Nintendo. Nintendo launched their Switch 2 on April 2nd, and it was billed as really laying out the full specifications of their products before the pre-order went live on April 9th. What we saw from our data was around 7 million people went to the pre-order pages between April 2nd and 10th. But what actually happened was Nintendo decided to pause the pre-order and revisit their pricing strategy in lieu of the tariffs. So we're seeing a real-world example here of actual purchase intent going to the pre-order pages, but a company in real time making changes to their pricing and their launch strategy based off the tariffs. Now, we're diving into an example now, which is a little bit different. And for many of you, including myself, I was not familiar with Whatnot in the last few weeks, but it started to come to our attention. Now, what is Whatnot? Well, Whatnot is a live shopping streaming app. So it's essentially very similar to what you would see on the TikTok version in Thai Douyin, when people essentially are live streaming products to sell on the platform. Now, it hadn't really come across our attention until the last couple of weeks, where we saw it surge in daily downloads. So from April 6th through 8th, this app had over 100,000 a day downloads in the US, surpassing TikTok and actually not far off Amazon. So what we're seeing here is a real-time shift in terms of consumers willing to use a different format to buy. And as we see potential pricing issues in the future and almost shifting attitudes in retail, could this be an area where people go to deal seek? And we can show a quick example right now in the little video with the build, Mackenzie. So here it is. This is Kate Spade earrings being sold live on the app. And this app is now number 5 in the shopping apps for the last 7 days, up 31 places from before. So showing a real-time shift in consumer behavior based off our app intelligence software. Next slide. So we talked about some consumer trends. We haven't necessarily seen a direct correlation between discovery and purchase right now, but with the turbulent environment, how do we think retailers are going to react? So over the last year, we've seen that Slick Deals has become a prominent source for many retailers in the US to attract deal-seeking shoppers. And with pricing uncertainty, availability uncertainty, and a general economic uncertainty, we assume that consumers are continuing to go to deal-seeking sites. For Slick Deals, they've driven over 193 shoppers to retail over the last 12 months. So what is Slick Deals? Slick Deals essentially is a deal curation site. So essentially it pulls together all the best promotions from online and then links you back to retail. And we've seen Slick Deals go up by 66% year to date. And essentially we're seeing now for these 6 retailers, it's pretty much the number 1 source of them gaining traffic. So as you go through the next months throughout the year, we expect the retailers that are going to win are the ones that are partnering with Slick Deal. And the brands that want to win are going to make sure their products are getting on the first page of Slick Deals. So what else are we seeing at retail? So we've talked about promotional discount. We've talked about some consumer changes. Now, cast your minds back to COVID. Anyone who's working in consumer goods or retail, we saw a lot of availability prices issues. We saw a lot of products going out of stock. And what plugged the gap? Well, private label plugged the gap. We saw a real shift in consumers towards private label during peak COVID. And we've continued to see that trend. So for us here at Similarweb, we've been tracking page views for private label on Walmart and Target. And for both the 2 sites, we've seen an increase of 38% for Walmart and 44% for Target since Q1 2023. So we see going forward with uncertainty in pricing, potential people trading down, availability challenges, that private label will continue to eat away at the baskets for many people who previously were buying named brands at retail. And Amazon. We can't not talk about Amazon. It's had a fair share of headlines over the last few weeks. What we've seen on Amazon is really some changes in price trends. So we're currently looking at the average price point sold in Q1 for the top 1,000 ASIN. So what's an ASIN? An ASIN essentially is a product on Amazon. So we looked at the top 1,000. And what we've seen, the area with the largest percentage growth year on year in Q1 is items under $15. These are items historically that haven't been particularly profitable for Amazon to sell, but they've had a real push in Q1 towards these lower price point items. So we're anticipating these trends to continue as maybe potential shoppers down trade, but also with pricing increases, we could see the inverse happening at different parts of the category as pricing goes up and we see some aggressive behavior from sellers based in China. Oh, if we go back a slide. Okay. And then, sorry, back a slide, Mackenzie. Oh, you're good. Go marketplaces. Okay.
Oh, okay.
So what about marketplaces? Surely the tariffs will be the demise of the marketplaces. Now, we've talked a lot about Temu over the last few weeks. So Temu, we've seen a lot of volatility in Temu traffic after a 3x rise in traffic since October. So the big shift here we've seen in Temu is that we did see a massive drop off of traffic around the initial communication of the de minimis changes. So this was around February 1st. We saw initially the de minimis was going to be removed, and we saw a huge drop in Temu traffic. You can see it there with the first red line as it goes down. Then we come to February 5th, and we actually see Temu traffic really rebound. And what happened then? Well, that was when we had the first pause on the exemption for the de minimis. And just for clarity for everyone, what is a de minimis? Essentially, it means that items under $800 flow into the US without any inspection by immigration. So they're flowing in with low tax and essentially really fueling Temu. And then we saw traffic rise. We saw traffic rise between February and April for Temu as consumers were still flooding there. And then lo and behold, we saw with the launch of the tariffs on April 2nd, we've seen considerable volatility once again in Temu's traffic as it drops off a cliff. Now, one thing to note on this for the traffic on Temu is that the biggest drops we've seen have actually been from paid advertising. We've seen an 80% decline in display and paid search for Temu, and that's really been the area where we've seen Temu scale back over the last few months. So what are people buying on Temu? Well, overwhelmingly, we've been looking at one certain category because we find it's a very novel category for Temu, and it's actually the compatible category. And what is the compatible category? Essentially, it's products that work well with well-known brands. So essentially, it could be a battery, it could be an electric toothbrush refill, it could be a beard trimmer blades. So essentially, what we're looking at are those products that you might buy with your named consumer brand from everyday households. And what we've seen, this category has seen a significantly large amount of growth since September. So you can see here from September through to March, the traffic has risen by 10x. And what's interesting is what we actually saw in the data when we were looking at today, we've seen a drop off, but not as considerable as you imagine. Even though consumers are migrating away from Temu in the short term, we actually seen this category itself really have a continual surge in traffic. And what's most interesting, especially with the kind of questions around Temu's future, is the price differential. Let's look at some of these prices here. So 9x cheaper for power tool batteries, 3x cheaper for electric toothbrush refills, and 4x cheaper for beard trimmer blades. So what does this mean? Well, with these prices so much cheaper, even with tariffs of 150%, these products are still very competitive. And especially as you think about how consumers' wallets could be shrinking, everyday products might be going up, this is a place for consumers to come to still get a deal. So while, yes, we've seen a drop off in Temu traffic recently, yes, I don't think it will be as dominant as it was, but there's still a place for Temu. And this is one thing we know about sellers operating from China. They are very agile, and we continue to see them change and adapt to the market. But we could not mention Amazon again. So Amazon back last year launched something called Amazon Haul. And for many of you, you may not be familiar with what Amazon Haul is, but it was Amazon's reaction to Temu. And essentially what it is low price point items, sub $20, that are being shipped from China. So it's a separate part on Amazon. If you go on there, you can see Amazon Haul, and it was launched quietly back in Q4. Now, we didn't see much change in terms of traffic on this platform until the day of the tariffs. And as you can see here from my dotted line, traffic's gone up since then 2.3x. So Amazon now is making a concerted effort to drive people towards this lower price point area of their site. What could we see happen in the future? Well, there's rumors essentially that Amazon actually might start to source those items not from China, but from the US. So we could see a pivot as the changes happen in the landscape, and Amazon Haul could come to the forefront to be an area that picks up some of Temu's traffic. So with that, what to do now if you're working in consumer goods and retail? Well, we've gone through here some examples of how you can monitor shifting consumer search and traffic engagement in real time. And we use that as Similarweb with our tool called Web Intelligence. So that's where you can head to that. Then also been looking at the tracking evolving deal landscape for new apps to established platforms. And that's using our app intelligence platform. And then coming through to tracking impacts of pricing and conversion across your brands. This is where we use our shopper intelligence platform. And this really taps into Amazon data. And then finally, a couple of reminders. Don't underestimate the ability of sellers from Temu and Amazon from China to really pivot and make the most of this platform, which seen a reduction in de minimis, but essentially there's still opportunity for them to play and win. And then finally, come to us to react in real time because we can give you the most holistic view of the digital landscape. So with that, we will pivot to Heidi and she will take you through travel.
Thanks, Ben. So I'm Heidi Frank. I lead our travel and entertainment business within the advisory services team. And within this section, looking at the impact of tariffs and a lot of this economic uncertainty, we're going to start with a lesson from the past. It's a bit more recent than you expect it to be, but then we're going to start to dig in using those learnings to understand what current value-seeking behavior do we see right now, and do we think we might continue to see in the next coming months. We'll also look at international bookings. This is one thing that has been getting a lot of coverage in the press for the past few months, ever since there was some back and forth with some of the initial rounds of tariffs between the US and Canada. And then similar to Ben, we'll wrap it up with what to do and how we can help partner with you moving forward. So on the next slide, we're going to take a bit of a flashback. We're going to go to mid-2022, which might be a bit earlier than several people really expected to see on here. And this also might be a bit of a record scratch moment, but why are we talking about this time period? You know, the summer and fall season, it was peak revenge travel. We were seeing, a really strong US dollar that was continuing to drive consumers abroad, but there were a few other things happening at that time, and it was really interesting going back to a lot of the research we were doing with clients back then, and we were finding some of the themes and the trends is that, a lot of travel stock prices were down during this time. Yes, probably similar to me. A lot of you were going off, internationally, but the stock prices were down as a lot of these travel brands, especially airlines, were still facing inventory shortages. And what was also happening from an economic standpoint was that inflation concerns were really at a peak. Prices were going up, and consumers were concerned how much more expensive travel would get, as well as other products, as well as what that would mean for a potential future recession. But what does that mean for the actual consumer during that time period? Our data was telling us consumers were concerned, but they were still traveling. We saw that cross shopping really reached some of the highest levels since reopening post-pandemic. We were seeing that direct bookings were very much preferred. We were also, though, seeing at the same time that traffic was softening as conversions held pretty firm. And similar to what you saw on the market slide, international destinations were really surging due to reopening and the strong exchange rates of the US dollar. So with that in mind, what can we tell you is going on right now, or what signs are we starting to see? On the next slide, one of the major signs we see in terms of value-seeking behavior is cross-shopping, and especially cross-shopping against OTAs. And what we are starting to see is potentially some of this starting to take shape with consumers even before the tariffs were announced. This data is for March, so we're looking at year-over-year changes and people looking at a accommodation option on a website and comparing and what share of the consumers on any given day were also looking at a lodging option on Expedia. And while some of this isn't necessarily huge increases in share points, we are seeing that it's growing for a lot of brands within the market. This isn't meant to call out one brand in particular, but more of just to reinforce that this is happening across multiple major brands within the industry. Another thing we start to see within value-seeking behavior is payments. So we're going to dig into in the next few slides some of the payment trends we're seeing within travel as well. So one thing just to really root ourselves is buy now, pay later. It has been slow to come into travel. Some brands have been earlier than others to really offer it. But what we've also been seeing is that consumer adoption has really been pretty slow over time. On the left, what you're looking at is just flat out year-over-year change in traffic for buy now, pay later sites. And what we see is that for most of the major providers, it is growing. So this, especially some of the newer entrants into the market like Sezzle. But when we can start to try to point where travel consumers are going, what we're seeing is that the share of airline consumers or visitors to airline sites that are also visiting a firm is growing. For some of this, it's pretty stable but slowly upticking, like JetBlue. But interestingly, what we're seeing for Southwest and American is that during March, the overlap between visitors between these sites and a firm has increased pretty significantly. And while some of these might be slightly lower base numbers, this is still showing that there is growing interest and that potentially some of this later adoption is really starting to pick up as consumers get to be a bit more concerned about the economic uncertainty in the next few months. Now, I'm sure some of this is probably just, okay, you're talking about overlap between, an airline site and, buy now, pay later. What can we do to get a little further down the funnel? So on the next slide, what we're looking into is more of these slightly more qualified or further down funnel consumers. The chart where you're seeing on the left, this is booking.com, and these are people who have reached the booking.com cart who have also visited a firm. And you're seeing a very similar pattern to that previous slide where we're seeing that overlap between Southwest and American, and a firm has grown quite a bit. We're seeing the people who've reached the cart on booking.com and have also gone to a firm has also really skyrocketed during March. And for Expedia, we can get you a bit further with one of at least my favorite tools of ours within web intelligence, which is segment analysis. And what we're able to do is identify within URL strings the payment method that people are using on Expedia. And what we've seen, and this is looking at the share of overall visitors who've used buy now, pay later as a payment, is that yes, there is some seasonality in March of using buy now, pay later, at least on Expedia. But what we've seen is pretty significant growth in the share of users who are using this over the past few months, and it has reached its peak during March. So I don't think it'd be too surprising for us to continue to see this trend as we go into April and then further into the summer travel season. And another form of alternative payment we need to consider in travel is points and miles. So what we also want to do is understand, our consumers going to be leaning on to these points and miles more than we've seen in the past. So on the next slide, we took a look at a few options. On the left, this is just looking at overall growth of traffic to some of these sites that really specialize in either point adoption, like Point Me is a travel site that is very much of you are getting a travel agent that can book your travel with your award points and miles. And some of these other sites, while they're smaller, they're very much focused on how do you acquire as many points as possible, how do you get the best redemption as possible. And what we also know is during the pandemic, and a lot of brands were sharing this in their earnings reports, as consumers were staying home and they were buying things online more and more often, there was also a hoarding of points and miles. And if just reading a few of the earnings reports, there's up to billions of dollars in the market right now of unredeemed points, miles that consumers have on hand. And what we're starting to see as you look at to the chart on the left is that while overall traffic for March to some of the major sites within travel or within airlines such as United, JetBlue, and Southwest is declining year over year, the amount of people who are searching for flights with the intent they've checked that box that they want to see prices with miles is faring much better than the overall site base. So I think this could start to be a time where consumers maybe aren't going to be as their budgets might be a bit tighter. They might be trying to find other ways to afford their travel, such as looking to see if they have enough points or miles to cover their trip. But another trend we called out at the beginning of this section that happened during summer and fall of 2022 was as consumers were getting concerned about inflation and potential future recessions, is we actually saw this very interesting dynamic where traffic softened, but conversions really held firm. And so this is essentially looking at the first 7 days of April of this year compared to last year. And we're starting to see this dynamic hold in again. What we're seeing is that for flights and lodging, that traffic is down by about 12 to 13% across the groups. But what we're seeing though is the conversions are holding much steadier. We're seeing flights are up by almost 1.5%, so pretty close to flat. And while lodging conversions are down by almost 3% for those first 7 days, it is a much better performance than what we're seeing for traffic. So this tends to be, so if this carries through, what might be happening is the top of your funnel may not be as robust as it has been for the past few years. But when you are getting consumers, they are probably much more qualified and they're going to continue to convert. Car rentals is a bit different. They stand on their own. They have slightly different seasonality trends. So this doesn't really hold through, but for the much larger industries within travel, for flights and lodging, we are starting to see this dynamic come back. And now the last bit of data we're going to talk about is where are international consumers going? Now, if I showed you this chart for February data, I promise you Canada would be bright red. We saw that during some of the initial back and forth between the United States and Canada about tariffs and a lot of the media coverage about Canadians not wanting to go visit the United States anymore, we definitely saw massive pullback from the Canadian market. This is looking at where bookings to the United States are coming from and how is it changing year over year for the month of March. So what we've seen actually for Canada is that bookings to the US have actually grown a little bit year over year, but we are starting to see other markets potentially showing signs of pullback. You're seeing some South American countries, specifically Brazil, pull back in their bookings to the United States pretty significantly. And if we look at Europe, we're seeing that Ireland, France, and Germany are already pulling back. Now, this could very much change, I think, by country and region based off of where some of these tariff conversations net out in the next few weeks to months. But I think what's also really interesting is for the US to look at this also at a city level. So the top US cities that were booked by international travelers during March were New York, Vegas, and then the 3 major California destinations of LA, San Francisco, and San Diego. And from an international booking perspective, they've pretty much all grown year over year. We can't necessarily promise the reasons why, but some of the trends we started to see, and we also saw similar trends coming from the Canadian consumers last month as they were pulling back from the United States at that point, is that a lot of these business-centric destinations like New York, especially Vegas with their conferences, will continue to grow, as probably there's still some necessity of doing travel for business and going to these areas. And you also can make that argument for some of these destinations as well in California, such as LA and San Francisco. So I think there's going to be some pockets of the United States that will likely continue to get international booking growth, but I would not be surprised if we start to see other parts of the country really suffer in international bookings as we get further into the year. So at the end of the day, I've thrown a bunch of data at you. What should you do about it? Really monitor your OTA cross-shopping trends. This can be a great indicator of how values, how much consumers are seeking out value. But also, I was just at a travel conference where this was very much a top of mind, and it's understanding that there's also time and place for OTAs. You might prefer that direct booking, but if you have some immediate inventory that needs to be filled, OTAs are still a great spot to fill it. Make sure your buy now, pay later options are really prominent at checkout. They were seeing increasing adoption, specifically in air travel, that we're seeing signs that this is going to have increased adoption amongst consumers. Also, expect for your award travel interest and potentially conversions to really increase in the lead up to the summer travel season. Also, second to last, watch your conversion rates. Ensure that your traffic is really remaining qualified, and see what you can do to, if you see that slip, to try to find those more qualified consumers, or the consumers who at least still have the budgets and the ability to travel. And then lastly, plan for volatility with these international consumers. So make sure you're really focusing on domestic growth. Again, I just came from that travel conference from last week. A lot of us were joking that, we're no longer really going to find probably precedented times. We're very much in an era of volatility. And I think when you're looking at where your consumers are and where your travelers are coming from, focusing on domestic is probably a great place to make sure you have a standard and consistent baseline. With that, I'll hand it back to Mackenzie to wrap us up.
Thank you, everyone, for joining. Thank you so much to Heidi, Ben, and Gavin. I think there are a few outstanding questions in the chat that we can try to get to, or we will reach out directly if your question was not anonymous. But biggest takeaway here is that we really hope you reach out and connect with us in the coming weeks and months as things continue to change, because I hope we've demonstrated not just the insights here today, but what we can and will be continuing to monitor and report ongoing. So we're happy to have a discussion on what we think is best for any individuals on the call. So thank you all again so much. Have a great rest of your day.